Hello friends, I am Pankaj Kumar and I have come with a very important and very useful video for all my fellow bankers and for the MSME units as well. You all know friends that this was the year which has been very badly affected by the corona pandemic, and it has affected all the segments of the economy. And if we say that the most adversely affected segment of the economy due to corona pandemic, if any segment has been most adversely affected, it is none other than micro, small and medium enterprises, that is MSME. So friends, we have seen that in the beginning of the year, the accounts came under stress due to the corona pandemic. And after that, Reserve Bank of India provided moratorium in the loan accounts in two phases. And from 1st March 2020 to 31st August 2020, there was a moratorium period provided in all the stressed loan accounts. And after that, we have seen that the matter of interest on interest, that is compound interest, was taken by a few people. The matter went to Supreme Court. The matter is still under Supreme Court hearings. Supreme Court has still not come out with a final verdict, but so far Supreme Court has said that all the accounts which were under moratorium has not to be declared NPA until and unless the final verdict comes from the Honorable Supreme Court. In the meantime, we have also seen that the government has refunded the money, the compound interest, the interest charge on the interest. That amount government has refunded in the 8th segment of the economy and up to 2 crore loans. So all these incidents happened in this year, and this has created a very unique situation in the banking books. And you all know that due to the moratorium, the account didn't slip to NPA, and after that, due to the Honorable Supreme Court decision also, the account has not slipped to NPA. But in many banks, many of the stressed accounts has technically slipped to NPA, and this is a very, very alarming situation. Suppose tomorrow the Honorable Supreme Court restores the situation as on 31st August 2020, what will happen? There may be a situation that many accounts will slip to NPA. Good thing is that there is already a Reserve Bank guidelines regarding the restructuring other than the regulatory package, and we all must avail this restructuring guidelines to save our loan accounts from turning it to NPA, and we should avoid slippage. So friends, I have made this video in 4 parts that will be very, very useful for you all to restructure your MSME accounts and avoid slippage. In the first part of the video, I am going to share with you regarding the eligible accounts for MSME. In the second and third part, I am going to share with you the assessment of loans for restructuring. And in the fourth and final part, I will be sharing with a case study for better understanding. So friends, let us start watching these videos. Please have some spare time to watch these videos till the end, and I am sure you are going to be benefited with this video. Thanks to all. Thank you so much. Please watch the videos. Thank you. Friends, as I told you, in this session we are going to discuss about restructuring of stressed MSME advances. So the RBI by its circular dated 1st January 2019 introduced guidelines for restructuring of stressed MSME advances up to 25 crores. RBI by its notification dated 11th February extended the timeline for restructuring till December 2020. And now with the recent Reserve Bank of India guidelines, while its notification dated 6th August 2020, it has extended the timeline for restructuring till March 2021. So this is the recent guidelines of Reserve Bank of India, which we are going to implement in the branches in the cases of MSME. So earlier also guidelines were there. There are certain important changes in these guidelines. So we will be talking about the recent guideline. So we all know that in restructuring accounts only 5% provision is there, and if an account turns to NPA, there is minimum 15% provision, because it turns to substandard account, and substandard accounts attracts provision of 15%. Friends, what I mean to say, these provisions are made from the profit. So when we are going to restructure the accounts, we not only save the profit of the bank, but we also provide a comfort to the business unit. And with this comfort, with this moratorium or with this additional facility, financial facility, they will be able to revive their account in a shorter period of time. So it is not that only we are helping out the MSME customers, we are also helping our bank to save its hard-earned profit money. We are also contributing to the society to fight with this corona pandemic, and we are also making efforts with this restructuring. We will be also making efforts to contribute our contribution towards the society at large, towards the economy at large, and towards the nation at large. So this is not only a banking practice. This is a very noble cause, because this corona pandemic has affected many businesses, and as a bank, and especially as a public sector bank or private sector bank, we must try to come to the occasion, and we must try to adhere to the guidelines provided by the Reserve Bank and our. So first we are going to find out what is the assessment and eligibility to do the restructuring in MSME accounts. Second thing, we will try to find out what are the benchmarks of viability. So first thing, let us try to find out the assessment and eligibility. And as I told you, friends, we will be sharing the recent guidelines of Reserve Bank of India, which has come in the context of the corona pandemic and which has provided some relief to the business units which have been impacted by the corona pandemic. So you can see the eligibility standards which has been given by the Reserve Bank of India and consequently by the bank is that the account must be standard as on 1st March 2020. So 1st March 2020 the account must be standard. Here I would like to make it very, very clear that it is standard, it is not regular. You must first try to differentiate between a standard account and a regular account. So what is a standard account? Even if the account is SMA 0, even if the account is SMA 1, even if the account is SMA 2, it will be considered as a standard. That you all know. So unless account has slipped to NPA, as on 1st March 2020, all those accounts will be eligible for restructuring under MSME. This is very important point to be noted. And whenever you go for restructuring, first thing you have to see whether the account was a standard or not as on 1st March 2020. Okay. The second point is, even if the account has turned to NPA after 1st March 2020, the account will be eligible for restructuring up to 31st March 2021. So this is the special feature of this recent RBI guideline, that if the account has slipped to NPA, although the accounts have not been slipped to NPA. Why it has not slipped? Because after 1st March, 6-month moratorium was there. After the moratorium period, Supreme Court decision is there, and the account has not slipped. But what Reserve Bank says, that even if the account slips to NPA, we can restructure that account and that will be treated as a standard. So the status of the restructured account will continue to be standard, whether it is a standard or NPA, as on date of implementation up to 31st March 2021. So the deadline is 31st March 2021. This is also very important to be noted, because we are running in the month of December and the time is very short, and by the end of this March 2021 we have to restructure all these MSME accounts. These facilities are given till 31st March 2021. The second condition is the unit must be GST registered wherever applicable. So where there is a prescribed limit for GST registration in context of the turnover in the business. So wherever the prescribed limit is not there, the unit need not register to GST, and those accounts are also eligible for restructuring. Aggregate exposure as on 1st March 2020 should not be more than 25 crores, including fund-based and non-fund-based facilities. So this is also very important point. Up to 25 crores aggregate exposure. What does aggregate exposure means? from the total banking system, a unit must not have more than 25 crores loans, whether it is fund-based or whether it is non-fund-based or whether it is combined loan. So, so above 25 crores, it will come under corporate loan, and the provisions of corporate loan under resolution framework will work there. So for MSME provisions, the account must be having exposure up to 25 crores. So this implementation, when it will be considered implemented? So implementation comprises of completing all related documentations, including execution of necessary agreements between lenders and borrowers, creation of security charge, perfection of securities are completed by all lenders. So it is not only the assessment of loan. So when we are executing all the documents, when we are disbursing the loan, and the loan is reflected in the books of our accounts also and in the books of borrowers' accounts also, then only it will be treated as implemented. The new capital structure and or changes in terms and condition of existing loans should be reflected in the books of all lenders and the borrowers. So these two conditions are there, and if these two conditions are fulfilled, then only it will be considered that the account has been restructured, implementation has been done. Now you can see, friends, the eligibility part, the unit should not have diverted working capital funds and it should be operational. This is one of the guidelines. Current account with other banks to be closed within 6 months from the date of implementation of restructuring package, and the borrower or promoter directors should have an impeccable record with our bank other than the current default or overdue, which is due to extraneous reasons and temporary in nature, but prima facie the unit is viable. Very, very important. The unit must be viable. The promoters, the directors must have been having a very impeccable record with our bank. So then we have to restructure those accounts. Now other conditions: provisional balance sheet certified by chartered accountant is not more than 6 months old, and last audited balance sheet not more than 18 months old. This is also a condition. EEB study for aggregate up to 25 crores is dispensed with. However, viability study by branch manager for limit up to rupees 5 crores and above 5 crores to be done by technical officer posted in the zone. At this stage, forensic audit is not required. So these are some eligibility points.